Okay, good morning, everyone, and welcome to the European crossover webinar. And obviously, we're getting some pretty good movement here in the SPOOs. I had got some headlines. Speaking headlines, if you want to call them my squawk. Okay, Eurozone, ISS, IHS, market manufacturing, final PMI 49.2 versus flash 49. Okay, whatever. Yeah, but we had a pretty good little run here in the SPOOs. And actually, I was looking for this level at 3,007. If you saw my stuff on Twitter, let me go into the chart. This is the same area. If you remember last week, I was talking about getting long at 3,024. And you can see here it is where we go. And the market fell to 3,007, actually it's 5 3/4. And then it rallied up all the way to 3,097 or 96, okay? So this is the area that I was looking for. You see that right here? Look at that low. Just so you see it right there? There, right there. I woke up this morning, actually, we were already above it. I was able to, got lucky on that jump and rode for a little bit and then came back in. I did not see this. This one caught me off guard. And hang on one moment. This jump back here, I thought which would have been right back to 3,007, and I jumped the gun a little bit coming in here at 3,004. Should have been patient, but I thought, oh no, it's going to stop at 3,005 and probably roll over. And then it ended up, rallying, and then I ended up adding some more. But really, like I said, I probably should have been a lot more patient. I mean, I was able to get out okay, but I was down. But here's the key: is I was looking at. I mentioned this in the chat room. Let's go back here. This 3,025, and let me get rid of this because I was using that as with the example. I posted a chart on Twitter. Speaking of that issue, was where I got long last week at 3,024. I was talking about the key 3,026, fell all the way down to 3,007. We rallied. I didn't write this whole thing up or anything like that, but I hung on. And then we stopped here. And this is what the area, once again, that I was looking for the market to struggle with. I said 3,007. The actual low was 3,000, like 5 3/4 or 5 1/2. But you can see where they went to. This is the area here that right now I said, well, if they get above that, I'm going to have to stop out. Now, probably from a risk reward price, thinking it probably doesn't make any sense. But I've been scalping in and out. I guess you'd call that, even though the range is a little bit wider. But the key is that you're going to have to use wider stops. The swings are so I would say that, well, overall you can say they're violent, but I mean the swings are big. Is that if you put your stop too close, they'll knock you out, and then you could be right and still lose money in the end. So this is my thought right here. I'll go. If they get above 3,025, and I was going to give it a little bit more room, but I was kind of kicking myself. Oh my God, I can't believe that it's pushing this high. My thoughts were, and then I'm probably going to be lower. Is that, and obviously I'm focused on the SPOOs since that's the thing that's really making all the big difference. The thought is, what the thinking is that there's going to be a big interest rate cut before the opening bell. Honestly, I just don't really see it because I'm thinking the Fed's a lot smarter than that. And if there is going to be an interest rate cut, it makes sense that it would come in the afternoon because here's my thoughts on that is that the people who are going to be, selling on Monday morning, and like I said, not that they're trying to whack the mom and pop 401ks, but selling that was going to be already predetermined from over the weekend that was going to take place is going to still be sold. There wasn't people that, other than traders that were going to go and say, oh my goodness, honey, the Fed's expected to do a rate cut. We better not be selling anything on Monday morning. We should go on and wait or whatever. That selling is going to be there anyway. So I'm saying this, to me, it just feels like the Fed's going to be wasting their ammunition. If they want to make the most of their ammunition, is wait till the afternoon because the selling is going to come on Monday morning anyway, regardless how much is going to be questionable or whatever. But I'm saying the selling is still going to be done. You're better off waiting till the market, in a sense, I guess some people are going to be disappointed. The market falls back. We see some more induced selling. And then the Fed comes out like about 2:30 Eastern, and then you've got a rally that's potentially sustainable, and one that would also be a good technical rally. We shall see, but I mean, those are my thoughts on that. But anyway, here we are. So my thought was when I woke up, I was kind of a little bit freaked. I was like, whoa, you know, what happened? I mean, I quickly jumped in there and got short, but I was thinking, did somebody do something? Now, there was something, I saw something about Japan stepping in and buying some, I'm checking on the live squawk. I saw something, I was thinking something had already happened. I was thinking, well, after I got in, I said, better look and see, did something really happen? But it said Japan bought BOJ bought Japan stock ETFs on Monday, Reuters market sources. So it's like, okay, BOJ normally does not buy ETFs on the day. Topics index is up in the morning, blah, blah, blah. So I was like, well, there is something, but it wasn't something like too crazy. So I ran that first little run down. Okay. I mean, as far as the dip back down, I guess I jumped in a little bit too quick. And I, you know, it is obvious. I did jump in a little bit too quick. I got a little too greedy thinking that I thought, well, 3007, once again, my number, I thought, no, I better not wait, and jumped in a little bit too quick. And then we quickly ran up there. If I'd been a little bit more patient, at least I would have come a little bit better, and then I would have liked this add. I wanted to add here, but I thought if I'm wrong, then, you know, I'm really going to take a good little nick. But anyway, that's the take on the S&Ps right here. We'll go on and get to the other markets. We can go. Also, gold has gone and rallied back or responded, whatever you want to call it. We'll go and take a quick look at that. Gold is rather interesting because we started out weaker, but here's the deal on gold. We actually rallied back to 3,090, which, or 1590, which is key, and then we fell back. Bear with me, here we go. Probably can't see it, but anyway, we fell back. Then we rallied up to 1606 and sold off $20. And you can see here we're just kind of bouncing around here. We'll go more into the technicals. I mean, the key thing is right now with the SPOOs, my thoughts here really is I think that the SPOOs will be disappointed, and that is a pretty good little area here. This whole above 3,000 is probably a pretty good, decent little area to go in and be short on the thought that we're going to be disappointed. But you'd have to come in pretty light if you're going to go and hold through that. But I just don't see the Fed wasting that ammunition on the opening bell. Better they let the market wash out. I'm surprised. I guess it was Japan buying the ETFs that sparked the move. We go back here. Sparked the move in the SPOOs. It got us above here. Because you can see here, the market seemed pretty quiet, and then we just ripped. I mean, we were trying to hit 29.72. I kept saying, oh, if they get above 3,000, get to that 3,007, I'll short it, blah, blah, blah. I still think that by the time one of the things I said was when I was mentioning those thoughts on Twitter was I thought that I was saying I think the bravery will be gone by the time the closer we get to the U.S. Open, and I think that is the case. I think we'll probably end up sliding here. If we make it back up here to 3,012, I'm gonna jump in. If we make it up here, but that 3,007 is key. You see what I'm saying? So, but this is right here coming across. I'll show you here. Things were happening so quickly that I really wasn't paying attention. Other than I knew that we had put in a high, this dip in here and have to pull back. Actually, this was a lot of good buying right here, right there, and we're still holding, still pretty steady. But we're just paring back. But if we were to get up in here, I'd like to jump in. Anyway, that being said, let's go and move into FX. We'll go on and pull up the calendar. Spanish manufacturing PMI. I really don't think these numbers are going to really make any hill of beans. Um, it's all before the coronavirus overall. I mean, so I'm not really giving too much credence to this stuff here. I mean, because they're final PMIs. Uh, Obviously, today is going to be completely different, focusing on potential coordinated central bank intervention, possibly. We do have at the bottom of the hour BOE mortgage lending and approvals. Once again, final PMIs. Not really. I don't think it's going to be all that important. Canadian PMI. Now that's going to be interesting here at 9:30 Eastern and at 10 a.m. Eastern. We have ISM manufacturing PMI. That should go on and move the needle a little bit. We'll see what happens here. Manufacturing employment and prices paid. And then we roll into the next day, and we do have RBA cash rate. To me, it makes sense if the Fed were to wait till the afternoon and then it just rolls around the clock. The Fed cuts at 2:30 Eastern. I'm just throwing a number out there. It would be a good time for them. Then we come into the Asian session. The RBA steps in and does some, makes their cut. That's what I'm saying. It makes the most sense. I think you get the most bang for the buck, but we shall see. But you do have to be careful in these markets. The way it was going, it looked like it was going to rip. I was thinking, well, I still think that 30.25 is pretty key, but if it got above that, I was going to have to go and just jump the heck out. But anyway, that being said, let's go and move into FX. So we've seen the euro take a little bit of an advancement here, made it up to 10.92, where we're at 10.63. Let's just go on and get into the news rather quickly. Spruce here holding at 3,000. Dollar takes a backseat as markets bet on Fed rate cuts. The dollar was on the back foot on Monday as growing expectations of the U.S. interest rate cuts to cushion the impact of the coronavirus stemmed some safety flows into the greenback. After U.S. shares were routed in recent days, Federal Reserve Chairman Jerome Powell said on Friday the central bank will act as appropriate to support the economy. Investors took the comments as a hint the Fed will deliver a cut when it needs. When it meets on 17th to 18th. I'm looking over here. Look at the SPOOs now dropping to 29.94. This statement is likely to be seen as a call to action to other central banks around the world, Westpac chief economist said. The euro last traded firmer at 10.59, yet the expectations around the Fed, with futures now implying a 50 basis point cut, also underscore the scale of the virus spread and now how deeply markets are on the edge. It's a bit of a dilemma today between celebrating the Fed cut prematurely and really selling off on risk, says Vishnu Varathan. Yeah, look at this boost now, 29.92, doggone. What's most important to the quote, Jerry Maguire, is to show me the money. It's not so much about the interest rate cut, but the 25 basis point interest rate cut is not going to make a business, and that cannot find the cash flow feel a little bit better. BOJ Governor Kuroda has also hinted at action, issuing a statement to the central bank would take necessary steps to stabilize the markets. Kuroda's comments curtailed the Japanese yen, which fall, and also dragging sentiment in the direction where most reports of the virus' relentless spread and economic damage. Then a positive case in New York, coronavirus. And just quickly touch on this. Australian New Zealand dollar, can't speak. Australian New Zealand dollars choppy as market goes all in on a global rate cut. See if there's anything of any real substance. We already know there's going to be RBA meeting. Expect to cut the cash rate to 50.5% at tomorrow's meeting. Further move to be fully priced in June. The RBA looks like it will join with seems to be a coordinated global easing effort. but policy sell-out thoughts will be now turn more likely to QE, and negative rates are globally, also in Australia. And let's see. Gold rises 1% as virus risk boosts rate cut hopes. Gold rose another 1% on Monday, rebounding from the steep decline on the precious metals. Dollar's weaker, euro strengthened, and this suggests gold will be up. Sedin is adding the negative correlation between the US currency and the yellow metal has materialized again. Well, I don't know about that. I'm just saying is now, now I suppose it's material. Oh, look at the SPOOs now, 29.87. Doggone. Well, they are sliding now, and so that last gasp up there, that 30.25, I wish I'd been a little bit more patient. But I'm flat now. But we're now at 29.87, so let's go on and move into the analysis. Bear with me. So euro extended its gains on Friday, rallying to 953, just ahead of the secondary bias chart resistance at 957. The pair closed above the key level of 1020, allowing for a challenge of 1095. The resistance remains 957. Confluence with 964. Support will be at 980. Well, he said it's allowing for a challenge of the level of 1095, and boom, that's where it went to, 1095. Obviously, that'll be the resistance. These are from Friday. So you can see right where they went to. They even took out the 61% here and went straight for that 1095. And that was the high for the day. And let's see here, and support. Well, we're holding above this 1020, and that's going to be support here, 1020. Excuse me. Let's see, and 1020. Should have been more patient on those SPOOs. And let's go and move into the cable. So cable bears have gained full control on Friday, breaking past the 28.42 with a clear shift in momentum. Over time, a challenge to 26.02 is expected. Short-term support is 27.42. You can see that there. We haven't quite made it, but with additional support at 26.68, resistance will be found at 29.17, and then the bounce being at the pivot. So we're looking for 27.42, a revisit. But as we mentioned here with this break here, the Bears do have full control now. And let's go and move on to the Aussie dollar. Oh, nice little rebound back here in the Aussie dollar with that supposed uh, um, potential coordinated central bank intervention. So the Aussie exceeded weekly support level 65.28 as increasing percentages for a possible rate cut at the next RBA induced further selling. Immediate support is 63.97 with 63.03 BNI before demand arises. Resistance is going to be 65.70 followed by 66.03. With me. Oh, there we go. So there's that weekly support we had from before, and we went past through it and on the way down here to, as I said, 63.97. That'll be support there, 63.97, which is actually for right now below the market. And on the upside, we have 65.70 followed by 66.03. Well, if we were to see that supposed rate cut, we'd see a much bigger jump here, but we'll just go right here. Right here with this being the 66.03, if it were to jump that high. And let's go and move into the Kiwi. Wow, a really pretty good rally here in the SPOOs. We got as low as 29.84 or 83, and we're already at 29.98. That key level once again is be right there about 3,011.50. If we make another run back up here, point is that we break through it, and we will be able to get above potentially 3,025. Unfortunately, I can't speak this morning. I'm a bit perturbed because even though I came out okay, I don't really like the way I traded that action. Just being impatient. Let's go on and move into the Kiwi. Kiwi found demand at weekly level 62.05. Generated minor short covering. A rally is possible to 63.50, but bears will seize on the moves to 63.82 or 63.83 to reload shorts. Support remains 62.05 with the break below opening the challenge to weekly level 60.85. Well, we're getting all these. You're getting these movements. We're already at 3,002 right now. Look at this. The SPOO's are already almost 20 off the lows. Almost 20 off the lows. Although I will say this range is a little bit more restrained. We are getting, because of this whole thing that the Fed's going to cut. I don't know. I mean, you have to take all this with a bit of I wouldn't say a grain of salt. The market's expecting. I just don't think I just don't see the Fed cutting before the open. It's silly because they're just going to cut and just offer people that are already going to sell a better fill, and the rally may not even last. It'll even induce more panic if we turn around and fall right back. So, but anyway, we're going to go 62.05. Why I think it's important that they wait until the afternoon after the selling's been done. 62.05. And on the upside, we said 63.50. For right now, well, obviously, that's what I'm saying. You have to take all this, I want to say with a grain of salt, is the concern is if we do see that cut. But I'll tell you, we'll go with the 63.50. That's what it said here. And let's go move into the dollar CAD. So the dollar CAD extended gains into a volume zone, finding bulls willing to take profits. You can see up here, we rally up in here. Look, boy, quite a bit of a reversal here. After an upside break of 150 pips, the pair will need to replenish at lower levels. Immediate resistance is 33.82, followed by 33.34. Resistance is going to be 34.11. So we talked about 33.34, and we're already even below that because look at this reversal. So support is going to come in right there. Actually, we just tagged it. You can see that right there. I'm going off of this line. That's it. 33.16. So let's go with 33.16. If it takes it out, it takes it out. I mean, like I said, you're going to have to be cautious today with all this bit about the Fed and coordinated central bank intervention. On the upside, it's going to be right here, 33.82. Let's go into the peso. I mean, this, I'll tell you what, this kind of is a good example of what you can potentially see today with these markets up and down, like a yo-yo. And you're going to have to take into consideration this potential volatility, just like we're seeing with the SPOOs and the positions I had. My stocks were probably not appropriate considering what I was looking for. But the thing is, if you don't have the wider stops, you can quickly get knocked out of the box. And like I said, be right and still lose money. So that's what I'm saying. You have to. I think Blake made an excellent point in the week ahead video. You really need to manage those. You need to manage your position levels. And I think that's going to be key. You really have to trade smaller so that you can handle these whipsaws. Moving on to the peso. The dollar peso has been on a remarkable run. The peso paired back from 1982, closing below key level of 1962. Demand levels are 1942, followed by 1935. So let's go with that. We'll put 1942. And on the upside, we'll go with 1974. You see right in here coming across? That's well, it's actually 1973. We'll go with 1973. But if the Fed doesn't cut, we could be right back up at those highs again. That's what I'm saying. It's going to be all over the place today, all these pairs. And let's go with the dollar yen. We'll have some UK data out. It hadn't even been moving in the data. I mean, we're just going to throw it up there. One moment. There. See what happens. Our bias chart support this morning is 27.42. Upside is 29.17. 20 more seconds, and then we'll move on. This last week, every time we highlighted the UK data, the doggone thing didn't even move. I really don't want to waste any time with it. $51.7. Just like I said, you see, it's not even moving. It's jumped up so far 2 pips. So as they say, next. So Dalian lost all gains with the yen regaining the mantle of the safe haven currency. The pair closed above 778 after tagging 750. In all likelihood, the pair may provide the most volatility going forward as the Bank of Japan is expected to take measures as the Japanese economy was eroding before the coronavirus. Resistance will be 845 followed by 903. Support is 750 followed by 710. We've actually already gone below 750 this morning, but we'll just tag that anyway. Bear with me. If the Fed doesn't take action this morning, we will get down to 710. So we're kind of like potentially be all over the place. Because I think this one offers the most. If you're trying to really get the most bang for the buck as far as volatility, then this is the one. I think this is, if you ought to be trading dolly, and if you really want to, be day trading and scalping around, this is the pair. This is the pair. You'll see some movement with the euro we have. Can't deny that. But, I mean, this is the pair that's going to be rocking and rolling going forward. And upside 845 followed by 903. Looks like we've already been up there. You see that? Unlike the others, this is the one that I'm going to go and put on both sides. You see what I'm saying? That's the one. This is the one pair that I think, and really all the yen pairs. When we get to the cross rates, oh my goodness, you'll see some big movements. It's the yen pairs are the ones that are going to be actually moving. The other ones, I mean, they've moved about, but if you're day trading, this is what you want to be in, is these yen pairs. We'll move on to the cash dollar index. SPOO's already back down to 29.91. The dollar index further eroded. Recent gains in the U.S. equity slide continued. Weekly support level and the pivot is 97.89 and provides support followed by 97.58. So we've already gone below that, so we'll go with 97.58, which it says. And on the upside, resistance will be the prior breakout of 98.42. Well, that's a long ways away. Let's take a look on a 2-hour chart. Right there, 98.16. I think that might be a bit of a stretch to make it all the way back up there. Well, we'll stick with that. With that, let's go and move into the cross rates. Look at the SPOOs. Now they're finally rocking and rolling. 29.88 right now in the SPOOs. That was a nice rotation for that 29.84 all the way back up to the 3,004, which is where I put that the second time I jumped back in on the initial position. And now we've met that, and then we rolled right back, which is what I thought we were going to do. And before we turn around and blasted all the way up to 3,020. Let's go move to the cross rates. So the Kiwi yen broke through the weekly support level of 67.18 before finding demand and subsequently climbed back above it. A further break challenges a previous weekly demand there at 66.39. Support remains 67.18, and resistance will be 67.93, followed by 68.38, where shorts will be placed. Two consecutive daily closes above 69 cents will be required to invalidate the bearish picture. Well, I mean, once again, here we go, is that if we do get that coordinated central bank intervention, we're going to be whipping around all over the place. So one of the things we talked about here was the 66.39 here. We'll stay with that for our bias chart support. On the upside, what you're going with the levels? Actually, you know what, they did actually tag it. Look, see 67.93. That's going to be our resistance. And that's all you can go with is these levels. In case in point, that's what we're at the lows right now in SPOO's. Recent lows 29.83. When the SPOO started to run up, I was looking like, what's the next key level? And that was at 30.25. And I put my stops above that. But like I said, you're going to have to trade small and manage the risk, because really with what I had, if it was normal trading, I'd be nuts. I should have already been out of the position. But that's what I'm saying, is that we're getting these wide moves. You see what I'm saying? So if you don't manage your risk, or like Blake said, trade smaller, you can find yourself saying, wow, I was right, but I still lost money. And so that's the thing. You're going to have to really trade much smaller to manage this risk. Let's go and move into the Euro Yen. Euro yen saw a violent sell-off, as was experienced with all the yen pairs. Support was found at 1847, taking out the prior lows. The pair's subsequent rally fell short of 1925 on the close. Resistance will be 1982, where shorts will be placed. A break of 1947 should find buyers at 1817. Once again, look, it's a lot of this, honestly, is going to be, to a certain extent, invalidated, this analysis, because you're throwing in a brand new equation, which is the potential that all these central banks are going to intervene. And so, once again, like I said, it's great for volatility, but once again, you're going to see some big swings here. So we'll go with the 1847 here. So make sure you do your homework as far as your levels. Look at that, SPOO's not 29.81. Now we're rocking and rolling, which I thought were going to happen. But then we saw that one more run up here in the upside before we really start tagging the downside. And I think that we're going to be lower. By the time we roll around to the U.S. Open, I wouldn't even be surprised we're below 29.50. Seriously. And on the upside, right here, this pink line, 1984. I think Blake said it yesterday also. It's all about timing, because now the SPOOs are rolling up. Now we're really dancing with an edge to the, a bias to the downside. You know what I mean? We rallied to 29.80. I mean, we fell to 29.83. We rallied to 3,003, and now here we are, 29.79. Now it's rocking and rolling. Like I said, I thought that second run up was going to expire around 3,004, 3,005, and then we'd roll over. Instead, that second time we rolled up and rallied all the way up to 3,021. So like Blake said, it's all about timing. But right now in this type of environment, especially with that expected interest rate cut, you have to factor in this volatility that we're going to see. Don't want to sound like a broken record, but that's the key, folks. It really is. Let's go and move into the Euro-AUD. Euro-AUD kicked off stops above 70. Confluence was 67.32, the 127% extension. As also continues to weaken. Support comes in at 68.41, followed by 67.39. Resistance 70, followed by 70.70 with a weekly level of 72. So we rallied. You can see here we actually rallied. We opened up at these highs here. We're going to put our resistance here once we get the 127% extension, 70.32. And support 68.41. Pretty good strong open is still holding up. The Euro Kiwi bolted higher as the Kiwi for the weekend coming up slightly short of the 77.52, which we actually closed open above that. While remaining to close above 76.03, potential is for a challenge of 79. We support at 75.21. Well, we're going to go right here, stick with that, 77.52. I already said stick with the levels. That's all I'm going to do right now. But, I mean, I think you have to, once again, look at your charts and be, we're just going to be experiencing a very volatile day today, regardless of whether the Fed makes a decision or not. And support right here, 76.03. I had 76.04, that's fine. Let's go to the RCN. The RCN broke to new lows with weekly support coming in at 69.24. Resistance is 71.08. And once again, like I said, a lot of this analysis doesn't make any difference at this point because once again, today we're going to be swinging all over like a monkey on the trees. So 69.24 on the downside. Upside, we're just going to split the difference right here. So we'll go right there. You see that? 71.48. And we'll move on to the guppy. Yeah, the key thing is with this whole potential for the now we're already at 29. We've already hit 29.71 now in this boost. Like I said, now it's rocking and rolling. A lot of this analysis is I don't want to say invalidated, but it's almost like it's dated in light of what's happening here potentially with the rate cut and coordinated central bank intervention. Friday's dam broke as the 140 of the guppy has placed bear squarely in control. First test will be 37.14. There we go. There's your 37.14. So that's going to be our support. Shorts will begin loading up at 39.11 with additional at 140. So there's 39.11. You see here? So there we go, 39.11. And we're just going with the levels. And we'll finish with starting odd. Now we're 29.64. We're coming in glued here with this boost. And that's why I thought that movement, that level above 3,000 was going to be so key. And like I told you, heck, we might even below, I said we'd be below 29.50 by the time, likely be below 29.50 before the U.S. Opens. Heck, we might even be below 29.50 before the webinar finishes. Anyway, Sterling Odd. Sterling Odd found sellers on the pop at 98.40. Closing below prior resistance level of 97.27. Immediate support comes in at 95.56, followed by major level 94.83. Once again, we're just going to play the levels here. So the levels are right here. You see here, 97.29. Go right here with this level right there, which is going to be 94.08. And that wraps up the currencies. And we just go move back into the SPOOs. And look at them. I mean, they're right on the lows now. And you can see, look at this volatile movement we've seen. If a little bit better look is right here on the 5-minute. You can see that. And the key being that 3007, and then we saw that rally back. And when we fell back here initially, I thought, okay, we're going to see 3004. And then I thought at that point we'll have this movement. But instead, we took one more shot and took that. They came up here and cleaned out the stops. And boy, did they clean out some people here. I guess the saving grace was I kept my stop. I actually moved mine well above so that they wouldn't tag me. But like I said, this rally back here, I thought was going to equate to this one right here. You see here? And then we turn around and roll over like this. Instead, we ran all the way up in here. And then we came back. And then right now I was hoping that we'd make it one more run to 3012. But we only made it up here to 3005. Remember how important that 3005 area here is, which is where they held when they had first broken, and then they rallied all the way up to 3096. When we came back up to 3005, look how we've rolled off. So from a technical standpoint, it's played out very well. And my thoughts being is, like I mentioned on Twitter, was that my thoughts would be that as we get closer to the U.S. session, you'll see a lot less bravery and people not thinking that it's going to be like, wait a minute, what if the Fed doesn't cut? And henceforth, now we've rolled off and come off 35 handles from just a 3,000 level. Obviously, on the downside, be looking 29.37. But what if the Fed doesn't cut? We're going to be challenging back over here, down here. Once again, it's going to be whipped around all over today. We've already made the run up in here, and got above that 3,000. I think most people are going to look in retrospect and say, "Oh my God, that was a great area to be short." In that area, but I don't think the Fed's going to go in and take any action ahead of the U.S. Open, but we'll see. We'll take a quick look here on the gold market. A nice rebound here. Certainly a good rebound, but this 1613 is key here. We've come pretty close to it, 1613. But this market is dramatically oversold. We were talking about this in the chat room on Friday a lot, talking about how people just wanted to be in cash. That was it, and why it made sense. They were just, even then, I didn't even expect the gold to come off that much. But we shall see. But we're getting this little bump up in here. Honestly, it's all good for gold. The next key level is the 1613, but I think a lot of the selling also on Friday was induced by people who probably had to raise cash and they had already made money in gold. And then on top of that, now if the Fed cuts, I mean, honestly, it's all blue skies ahead for gold if you think about it. I mean, at least from a sentiment standpoint. Not that, I mean, we have rallied up to this. The key level right now was the 1606, and we got to the 1606 and then turned around and sold off $20. And really, it's all good for gold because if the Fed does cut, okay, lower interest rates. If the equities have come off, from their lows, okay, then they don't need any further selling in gold. And if the equities do sell off, well, then now you got the safe haven for gold. So I'm just saying it's like check, all bullish, scenarios for gold. So next key level 1613 and then beyond 1622. But certainly I think it's a market that has to be bought on dips at this point. You've lost the case. Last week, remember how gold got all the way up to 1700 or just about 1700. We kept falling and falling and sliding, like, why the heck is it rallying? And of course, Friday, like I said, everybody wanted to be in cash. At this point, it doesn't make any sense if someone's saying, okay, now I'm going to take a short in gold. That's crazy. Because like I said, it's all blue skies ahead now for gold. Either way you look at it. Okay, now equities have stopped falling, so there's that takes away the necessity to dump gold to raise cash because you're losing stock positions. The Fed's going to go on and cut rates. Okay, well, that is a rally for gold. Okay, well, now the equities are going to sell off after all. Okay, well, now gold gets to play the safe haven. And so, like I said, potentially the market, probably the next real key level is back here. You see there? 1638. And in fact, we'll go right here. There. That's a key level for gold. We'll actually take a quick fib on it. $16.13, that's also 38%. 16.38, well, it's just below the 61%. But that 16.13 is key, but once again, that just may just allow it to pare back a little bit. We'll just go and take a quick look at crude oil. It's been whacked pretty good. Honestly, I don't really see anything necessarily appealing in crude oil at this point. I mean, I'm sure there's going to be some area where, I mean, if you want to look at it from a there it is on a weekly. $44.61, and we've actually been as low as 43, like a dollar lower. Actually comes in at this low here. That was 43.45. Key level here is 47.13. We've actually been as high as 46.72. But I don't really see anything appealing here with crude oil. Personally, I mean, the real movement is obviously in the SPOOs. We've already been as low as 29.60 already. We've rallied up to 29.72 and we're rolling right back down again. And that's about it here. Crude oil, I mean, gold, 16.13 is going to be the 38%, but I think to me it's going to be the real key level is going to be 16.38. I think it's everything points to bullish for gold at this point now after Friday's deluge of selling, which was really about raising cash. But that's all we have here. We'll see you in the chat room. Thanks for joining us here on the European Crossover webinar.